We're sitting down with Hector Jirau from Parallel 18, the executive director.
So Parallel 18 started as an acceleration program. I always like to explain it as an initiative to push what you already have created to that next level.
What are some of the trends you've seen, whether it's types of companies coming through? What have you seen being successful? What are just some of those insights you have? You can share the fun ones too. We'll take it piece by piece.
You just don't go to an exchange and say, hey, I want to buy SpaceX, right? You actually need to know people who are willing to
You need to
sell.
know Hector.
It's uncommon.
Welcome to the Uncommon Entrepreneur podcast, where we highlight top entrepreneurs, investors, and game changers that are hyper-local in Puerto Rico and hyper-global, mismatching a social economic perspective that is going to give you diverse backgrounds of people. So we're excited today. We're sitting down with Hector Jirau from Parallel 18, the executive director. Appreciate you joining the show.
Thank you so much for having me, guys. It's always a pleasure to share a little bit of time with you guys.
Yeah, awesome. So we've known each other for a little while in a couple different capacities, but for those who don't have the pleasure of knowing you yet, who are you? What's your background? And how did you get to where you are right now?
I'm going to try to keep it short then. So my name is Hector. I was actually born and raised in Utuado, Puerto Rico, right in the center of the island. Like pretty much all my life, I spent it over there. Then afterwards in high school, I ended up, when I got to college, moved to San Juan. I've been here since then, almost 13 years from them. So on my background, I'm actually trained as a scientist. I did my bachelor's degree in molecular biology in the UPR, Rio Piedras, Gallito. Afterwards, I went to UPR Ciencias Médicas. Under the School of Medicine, I did my PhD in biochemistry. While I was doing my PhD, I did a master's in financial engineering, focused on risk management. And yep, I ended up as the executive director of Parallel 18. I've been in the industry for a while now, since 2015-16. That's where I did my shift and started doing a little bit more research on finance per se, on the opportunities that were there, particularly for scientists. And that's how I ended up in this wonderful industry right here in Puerto Rico.
So give us some context. Why did you make the transition? What was kind of going through your mind, and then how did it kind of evolve?
Great question. So as a scientist, you're usually pushed to just perform academic research or go to industry. Those are like the two main and primary career goals. You either go to work to Biogen or Amgen, Pfizer, or J&J, or you go to a university and perform research. That's pretty much what people tell you. But I started digging a little bit further, and one of my mentors, who's still my mentor, Dr. Jose Rodriguez Orengo, one of the faculty members at the Department of Biochemistry in the School of Medicine of UPR, told me, you should dig deeper into entrepreneurship. And there's a whole world in finance and investments that you're missing out. And I decided to do so. I decided to research and pursue further where I could get as a scientist outside of academia and the industry. And throughout that process, I discovered that there was a lot more to it. I ended up taking the license and becoming a registered investment advisor representative. I ended up doing a master's in finance. And in the end, I did love all the research I performed. My research was focused in respiratory toxicology. So it was a very, very great topic. You learn a lot, you see a lot of different stuff, and you get a new perspective into the molecular basis of life. But the reality is that it wasn't my passion. I really wanted something a little bit different, and that particular thing I found in finance.
Interesting. I want to go back to something really quick. So you said your mentor told you should dive deeper. So, I mean, I think most of us would agree mentors are important. Yeah. But also, you brought up something, what you were initially told. Do you see that as common in your experience, that maybe a lot of people just do what they're told and totally miss the mark on the opportunities, or what's been your experience?
You're 100% right. I mean, you can go to any academic institution and they'll probably try to push you to, go the classic way, go through the traditional path for scientists. You go you complete your PhD. Afterwards, you go to another institution and do a postdoc, right? You get better prepared in a specific topic to perform further research down the way. You apply for different funding mechanisms, you apply some grants, you bring them to a new institution, and then you start specializing in a special field. most of the institutions are going to do that because in the end, you want your science to go further, right?
Sure.
You want the next generation of scientists to actually dig deeper on what you did your whole life. And I respect that. I really do. It's admirable up to a point. But then again, I believe that regardless of what you study, you should be given the freedom to decide how you want to use it.
Sure.
When you do a PhD, there are some very critical skills you learn. Critical thinking, problem solving, and writing. Regardless of the topic that you research, those 3 skills are imperative. And you can actually apply them in anything in life.
Sure.
It shouldn't only be in academia. And that is something that not many people recognize. And they end up going the traditional way. But you can actually use that pretty much in anything.
Sure.
Particularly as an entrepreneur. Entrepreneurship is all about problem solving, critical thinking, and being open box. And that's pretty much what a PhD prepares you for. You end up doing 5, 6, 7, even 8 years of research and problem solving to create new knowledge. You're basically exploring a specific niche to find something that nobody else knew before.
Sure.
Isn't that being
to be exploiting opportunity?
Exactly.
I wonder what the data shows on that. I haven't looked. Maybe we can look it up sometime. But like for PhDs who do end up going the entrepreneurial route, like, are they more successful than others? Is there trends in the types of companies they bring? Do they last longer? Are they just better research from the beginning? I don't know. I have no idea, but now I'm going to be curious about it.
We have a side project now.
Perfect. All right. We'll
So maybe just to give some context to what Parallel 18 is to the listeners that maybe aren't aware, and then what the programs are and like who they're for, and that'll kind of set the stage for some of the questions.
Wonderful. So Parallel 18 is a program of the Puerto Rico Science, Technology, and Research Trust, an organization who is pretty much leading any efforts that are under expanding research and development, developing new technologies, and supporting the entrepreneurial ecosystem to further down the road center Puerto Rico as a central point to innovate. So Parallel 18 started as an acceleration program, like you would see Y Combinator, Techstars, 500, and continuously started to be developed into a full-fledged innovation hub. So now we do pre-acceleration, we do acceleration, post-acceleration, we have our own investment sub-program, we have a corporate partnership sub-program, we have a talent sub-program, we have many different initiatives under Parallel 18 to support entrepreneurs both locally but also internationally. And I think the most difficult concept to understand is acceleration, right? Not everybody that does business understands what acceleration means and how it applies to them. I always like to explain it as an initiative to push what you already have created to that next level. Whether it is to export to a new country, whether it is to attain a new vertical or a new go-to-market strategy, maybe add some new products to your pipeline, or raise capital to expand your operations. All of those are encompassed inside what acceleration is considered to cover. In pre-acceleration, you go a step back. You have a functional prototype. You have an MVP, but you are yet to launch or are currently optimizing your go-to-market strategy. It's fantastic. That's what pre-acceleration does. It gets you into the market. In terms of post-acceleration, people will think, well, if you already accelerated and went to new markets, you pretty much know how to do business now, right? And we understand that and we recognize that. People and companies that are in a post-acceleration phase, they don't necessarily need to know how to run a business, right? You don't need to teach them. They pretty much do already. But they have some very specific asks and requests that outside of entrepreneurship support organizations, they're very expensive to solve.
Sure.
Consultancy becomes very expensive and hard to reach. You don't have that much access to consultants on your line. And if you do, again, big bucks.
Yes.
That's what we do in post-acceleration. What do you need and how we can solve it? And we go through that way. So in Parallel 18, we try to cover a little bit about everything. Of course, supporting in Puerto Rico, local entrepreneurs. That's our main audience and our biggest desire to support pretty much every entrepreneur that comes to our programs. And there's a huge entrepreneurial spirit in Puerto Rico. So there's only a few of us that can juggle with it, but we're trying our best to serve the population.
So what are some of the trends? It's been a few years. I mean, you've worked in a couple different capacities with Parallel 18 on the investment and the fund side, principally, and then moving to executive director. What are some of the trends you've seen whether it's types of companies coming through, what have you seen being successful, maybe what hasn't been successful? What are just some of those insights you have? You can share the fun ones too. We'll take it piece by piece.
Wonderful. Okay, so in terms of which companies do I see trending in terms of how they're developing and which industries they're covering? So Puerto Rico has a lot of healthcare people, not necessarily biotech people. It's very different. Healthcare encompasses a whole sector. Biotech is just an industry. So healthcare-wise, there's a lot of people trying to innovate in healthcare, and they're very good ideas, very good scalable business models around it. So we've seen our fair share of them. Although they are very, very heavy on R&D, they seem to be actually, getting some traction now. It takes time. Puerto Rico has a nascent ecosystem, so we're still on the early phases, but we're seeing that progress. In terms of trends as a general, which we've seen participating a lot in our programs and getting the extra benefit, like we call it, actually getting the best out of it. Anything that's developed as a software as a service, it's usually very well aligned with what we do. Most of our resources and mentors align one-on-one with people developing platforms. Regardless, it is a fintech platform to facilitate payments, or maybe an HR platform to hire better creatives. Those tend to be the companies that actually scale faster throughout our programs.
Would you say that's just because they're like a SaaS company or they're structured that way, or do you think there's something else that causes them to excel faster than others?
I would say it's due to the nature of the technology.
Sure.
I mean, SaaS is very, very, very good to scale. It's not easy, but compared to other type of technologies, it usually scales faster. And we are in an island, and Puerto Rico, although we Puerto Ricans in heart see it as a big island, deep inside, objectively, it's a small spot. It's a small place.
Sure.
And given that, this type of technology tends to scale faster because you can actually export it a lot faster and a lot easier, and its unit economics are very, very favorable to do so.
Sure. So I know you've spent quite a bit of time, especially after doing your master's and stuff, on the financial side of things. Yeah. What have you noticed from on-island companies and investment opportunities versus maybe off-island? What are some maybe differences that you found within the ecosystems or the companies themselves?
So Puerto Rico has some great technologies and some great innovators and wonderful entrepreneurs. Nothing to envy out of mainland US. Of course, we need to remember that Puerto Rico is an early stage ecosystem. So you can expect to see the same level of growth that you will see in mainland in here. Now, I've seen companies come from Puerto Rico, move their operations and expand their operations, leaving their headquarters here, but actually operating in mainland US as well, expand just like any other company would.
Sure.
In terms of mainland US, there's just so much community in the startup ecosystem that facilitates expansion. And that's something we're still building in Puerto Rico. We're still building that community. People need to realize that you having a startup and me having a startup doesn't mean we need to compete. It actually means quite the opposite. We should find a way to match synergies and collaborate.
Sure.
Cooperation is what made Silicon Valley what it is today.
Yeah.
A fintech startup would suddenly share coffee with an HR platform, and they suddenly found a way to collaborate. Long story short, in a year and a half, they both merged, built a bigger company.
Yeah.
Community. Or maybe you know a few investors that don't align with your industry, but they do with mine, and you already know them and you get along with them. Make an intro. Yeah. You see that type of collaboration happening in mainland US. We're still seeing a little bit of competitiveness in Puerto Rico, but we're working on fixing that.
Sure. Yeah, well, I've actually seen a difference even in the last 5 or 6 years on that front, and in general, not just in startups, but in business in general on the island. But it's true. And Drew likes to say sometimes co-opetition.
Yeah.
And
I'm gonna borrow that word.
It's free to use.
Thank you.
and it's true. I mean, it's that spirit of helping and seeing, okay, well, how can we work together to grow the whole pie?
Yeah.
There's so much opportunity, so much innovation, so much collaboration. That's one of the things I actually love about the ecosystem, although it's nascent, as you mentioned. It has been growing. And I mean, I come from a different perspective. I didn't grow up in the mountains of Puerto Rico, but I've been here for a little while, And a lot of the people I have the pleasure of working with have moved down. So they have that mindset, maybe in Silicon Valley or Miami or wherever they were, Chicago. And I love seeing the mix. I mean, that's why we're even here today, is because that mix is just magical. Like seeing what you were talking about, these people sit down or maybe they meet at one of our events or something like that. And the next month, we spun out a new program or algorithm or who knows what. I love seeing that.
That's how our communities are built.
Yeah, you're literally building on each other, and not in like a negative way. You're not stepping over each other. You're just building on each other. Yeah, I love that.
So maybe give us some context to like you're saying that this is a new ecosystem for maybe those that are listening that don't have the context of where Puerto Rico was 10 years ago to now. Could you just give us kind of a brief, like just some perspective?
Yeah, so you look back, way back, 10, 15 years ago, you would find that Grupo Guayacán, run by Laura Cantero and Nerma, were pretty much the stakeholders, principal stakeholders in the ecosystem. They are like the historical minds of all this. But you would look back then, and we didn't even have 80% of the resources that we have today.
Oh, sure.
It was lacking. Back then, being an entrepreneur wasn't something you chose in life to do so, right? You could be a business owner. That's something respected. But you will probably educate yourself and work just inside a corporate ladder to get to the next level. You will probably be in 20, 25 years CEO of X or Y company, but you wouldn't just, go out there and become an entrepreneur.
What do you think that is? The mindset, why was it that way?
I think, wow, that's a very deep question. If I were to use my own experience in life, I think financial security used to be something that people sought after a lot. People weren't that open to take risk. And entrepreneurship is all about taking risk, right?
Yeah.
Nowadays, taking risk has become highly popular. This new generation is more willing to take risk.
Yeah.
You look back at our previous generation, they were more conservative, right? I remember when I was doing a lot of investment advisory, for example, people did not want to invest in startups or invest in alternative investments like private equity funds or hedge funds. No. They just wanted to buy fixed income. They just wanted, corporate grade bonds.
Yes.
Yeah.
That's the deal of the house.
Things I've never touched.
You got something double A there? Whoa, that's risky for them. They wanted financial security. They wanted to feel that their money, even if it wasn't yielding that much, was safe.
Yeah.
And that same mindset on financial security led to people in their homes, as a family, we're going to be working, you'll become a lawyer, you'll become a doctor, an engineer, secure yourself for the rest of your life, a fixed salary or a fixed growth. And that's financial success. That's success in life.
And culturally, that's very ingrained. Like my landlord at my old house, we call like the AC people to fix it, and they're like, "Oh, the engineer, so and so." So they use engineer as a title, like doctor and lawyer and everything. So like those titles, and they're very proud of it, and like people are known for those things, and it is. I mean, they're great professions and very respectable and that sort of thing. But I've noticed that, especially culturally here, more than other places. Like I've never heard anywhere else, engineer so and so did this, and I was just like, that's weird that they call him that, but I noticed that more and more. It's just an interesting.
And it's funny that you bring it up because when I'm in academia or I am teaching or I'm invited to give a guest lecture, everybody would refer to me to Dr. Jirau, right?
Yeah.
But that's only in academia. I go out there, I'm just Hector, and I'm super okay with it. I mean, I actually like people just calling me Hector. But you go to anywhere else, and it's something that's being repeated in the industry. If you're a scientist in the industry, you are Brian and you're Drew. Because everybody has a PhD there. So you don't need to call everybody a doctor. But in academia, for example, it's still ingrained. There's like this respect to faculties that you need to call them by their last name and doctor. And if you don't have a PhD but you're teaching, you're professor.
Yeah.
Right? As if there was some sort of distinction when reality it's the same, right? And I feel comfortable with people just saying Hector. But like you said, there's just like ingrained in the culture where you call an engineer. You call a lawyer licenciado. All right? You call your CPA licenciado.
I don't know what they're going to call me. Shoot.
I usually joke around and tell people I'm also a licenciado because I have a driver's license. But yeah, culturally, we tend to be very conservative and historically, there has been reasons for that.
Sure.
We know that Puerto Rico has gone through some tough economic times, and our past generations went through it. They're still conservative. They're still, not comfortable with taking that much risk. Like you would see people in New York, Boston, or San Francisco Bay Area doing that. Pretty much get their check, and they just, well, what do I need to live? The rest, let's see what we do with it.
Yeah.
But I think we'll get to that cultural shift sooner or later.
Sure.
People have become a lot more flexible these days.
Yeah.
You're seeing a lot more angel investors than you would see 5-10 years ago.
Oh yeah.
So let's dive into that. So speeding to where we're at now and where you see things going in this ecosystem, like there's obviously a lot of challenges as faced Puerto Rico. A lot of people off island that might be listening are wondering, like, is Puerto Rico back online after earthquakes, hurricanes, pandemic, all the things and so forth? Like, what are some of the significant challenges that you've seen, and how is P18 and the ecosystem at like, where do you see it going, and how have they dealt with it all?
That's a great question. So check this out. Pre-18, our pre-acceleration program, started after Hurricane Maria, as a response to Hurricane Maria. We saw that Puerto Ricans are very resilient, right? They actually, get their hands dirty and can actually push forward with anything that happens in the island. That's why Pre-18 is a local program. It's directed to Puerto Ricans. We flexibilize it to Puerto Ricans in the diaspora as well, because they're family as well.
Yes.
And we want to support them. We want to have them bring their technologies, their new innovation back to Puerto Rico. And what we have seen since then is that every startup that pops up and grows and scales through our different programs and also through other support organizations, they are very, very resilient. They know how to travel and swim around tough times. And that's something that you wouldn't see before. Before that, around 2016, the ecosystem was still very, 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 very early. But people test out new ideas, and if they didn't really work, they just skip, right? Now you see more resilient people, particularly local startups. I have my handful of startups from mainland US, Europe, Middle East, etc. And you see that if they see their idea is not working, they are hesitant to pivot. They prefer just to break it down, just close it, and start all over again with something new. Local companies, they actually pivot when they see that the business ideas may not be as feasible as they thought. Instead of closing down, they actually make a double bet on themselves, that we can take this, we can bring it up once again. If we went through Maria, we can go through this as well.
Sure.
So at least that quality and that trait, you can see in Puerto Rican startups a lot.
And that's important. Like, and I've seen that there's some that we run into it in the co-working spaces. I feel like every time I see them, every couple months, it might be a little different slant on something, but it's good. Like, they're optimizing. They're like, okay, well, that's not working, so now I shifted to be B2B instead of B2C or something. I'm like, well, that's good. Like, you're actually learning, taking data and making decisions. And I've noticed that with a bunch of different ones. And at first I was like, man, they can't keep up their... I had a different mentality when I first was seeing that. But as I really got to sit back for a while and watch, I'm like, all right, but they're finding their path. And everyone does. I mean, rarely are you going to have your one-hit wonder and the first thing you build is a unicorn or something.
Yeah,
So
that rarely happens.
Yeah.
So I think there are only like 2 stories like that.
yeah. But that's what everyone sees.
That's the thing.
Or you only hear about the good part. Like, how many people can tell you anything else that Zuckerberg worked on, or others like that too?
Thank you for bringing that up, because that's something that it's uncommon. People have, fantasized about the whole Silicon Valley standard story, that somebody, an idea popped into their mind, they saw potential, they raised capital, took it to the next level, closed their Series A, continued financing, closed their Series D, prepared for an IPO, went public, boom, billionaire. That's a standard story. That's so unlikely to happen. It's just ridiculous. I mean, the probability of a startup going through that particular path, it's almost null.
Yeah, it's like getting struck by lightning.
Literally,
or less.
You
Probably less.
probably have a better luck just getting struck by lightning than going that way.
Yep.
And it has its positive because it inspires people, but it also has its negatives. setting up expectations.
Yeah.
And
That's a huge
we have
one.
seen it a lot. We see a lot of people that they develop an idea and they just want to raise capital to launch it. And that's not how you do business, right? And I tell my startups this every time. I always tell them, why did you take this step in the first time? Why did you choose to be an entrepreneur? And they are either going to be honest with you and tell you, because I wanted to make money. Yeah, you run a business to make money. If you run a business to help people, that's called a non-for-profit institution. It's different, right?
Sure.
If you're a for-profit business, you're there to make a profit, to make sales, generate revenue, to grow, right? And the reality is that people have lost that sense of doing business. And you would be surprised that the most successful businesses I've seen, at least on my side of the story, my perspective, Hector, are those businesses that from the first time they actually sell their first license or product or service, they started to focus on selling, making revenue, growing their company. Bootstrap businesses tend to have a lot more success.
Oh, yeah. I used to work for Qualtrics, and Qualtrics was born in like a basement and whatever, and grew to be a unicorn, sold for $8 billion cash, but I left early and surrendered my shares. Anyways, that aside, but they didn't take on capital for like the first 10 years. And then they were the first company that Sequoia and Excel, two big juggernaut investment groups, co-invested on ever, because like, we have to be part of it. Because by the time they took capital, it was just to grow faster. They didn't need it, but they're like, all right, well, let's pour gas on it. But very resilient, very strong. I'm trying to remember the name of this podcast. I think a guy named Gregory Head does it. But it's all about SaaS companies and everything who don't go after capital, who build it organically, but still have multi-million-dollar companies, and they're doing well, and they do all these things.
Constellation Software, for example. That's a company that pretty much bootstrapped the whole way. Then afterwards, they started raising capital.
Or MailChimp.
MailChimp is another good story.
They didn't raise, but they just sold for a lot into it. And that's one of the things that we run into. I think we did a video a long time ago. I was with Jennifer Hopp, but we talked about the differences in like the percentages of how many actually go for venture capital, and it's like 3% maybe. Are you one of that 3%? Probably not. Like, odds are you are not one of those 3% that could be a good fit for venture capital. And that's important from an ecosystem standpoint, that we don't over perpetuate that either. Yep. So I have liked, and there's Unlock Capital, another group, and others that do a good job, is they're helping prep companies for raising capital. But I think in this most recent cohort, they have some debt stuff, some royalty, maybe one going to go for an acquisition. And very rarely are they like prepping to really raise a VC round. Sometimes, but it's a little more, what do you actually need? Like, do you want to bring on investors? Like, do you want to have them breathing down your neck or on your board? Do you even want to have like a board that you have to answer to that's not you and your family running it or whatever it is? I think it's super important to go through all those different aspects.
It's very good that you mentioned that, because as you can see, people are diversifying the way they finance their businesses. And that's due to the fact that venture capital right now is very dry. Like, I was talking to a few of my colleagues that are more in the growth stage and late stage private equity side. And I would ask them, how is fundraising going for investors?
Yeah.
Right? How are you raising your next fund on your next vehicle? And most of them, the answer is, look, dude, the reality is that we invested so much back 3 years ago that we're stuck in the IPO gate, and we're unable to actually liquidate.
Yeah.
So we are actually waiting for IPOs to get hot again, so that we can actually create some new cash flows and then start investing down the pyramid. Like literally, that's one of the things. And you can see it with the issuance of new liquidity funds and GP-led secondary funds.
Give some context to that.
Yeah, for those who don't know, explain what those are.
So the secondary market is a very limited market to accredited investors and qualified purchasers particularly, because that's where you get to actually gain stakes in SpaceX,
private companies,
BitPay, Kraken, Adpar, Databricks, etc. And the thing is that it's a very difficult sector to get in, because you just don't go to an exchange and say, hey, I want to buy SpaceX, right? It's not that easy. You actually need to know people who are willing to
You need to
sell.
know Hector.
Well, it's not that easy either. It's not that easy. I did a lot of work with Unity Growth Fund on the secondaries market. They have done wonderful, by the way, on actually acquiring shares from these advanced companies at a discount and actually giving people access, basically democratizing private markets. But secondaries, it's pretty much that prior step to liquidating your own stake in a private company that isn't that reachable, but it's the only way you can actually, gain some cash when you are fully vested in a private company. You either get an exit when your company gets acquired, or during a merger, they may do some cash liquidations, or you go public and you sell in the open market. Other than that, there's no other way you can actually, gain cash for your shares unless you sell to your CEO.
Yeah.
The secondary markets tries to facilitate that. The thing is that we are seeing the secondaries market step up a lot. And when that happens, it means that people are basically stuck at a point that they need cash. So they're liquidating their stakes to gain some liquidity for their day-to-days, maybe to buy a house, maybe because now they have to raise a family, etc. And when you see the secondaries market becoming hot, that means that down the way, it's just too illiquid right now. There's not that much cash. And you can see it. Most VCs that I know of are investing in companies that can show traction.
Sure. Imagine that.
Who would have thought, right?
A novel idea. Invest in something that's traction.
Investors are literally asking, how much are you selling? What's your business plan? How exactly are you going to monetize your services?
Yeah.
In 2018, nobody would ask that. What are you building? I love it. I'm betting on it. Wonderful. Now, when cash is scarce, people start asking questions. And that's why I tell our startups, don't focus on just selling the pitch deck. The pitch deck is your entry. That second meeting, they can ask for data. You better have your data room built. You better have some projections that are realistic.
Yeah.
Because they're going to figure it out. And further down, your valuation, it cannot be a fugazi. It has to be something you can calculate. Because I can bet that the investor on the other side, they're going to do some modeling. And they're going to figure out your valuation. If you don't know your valuation, you may be underserved.
Do you see that as a big challenge with the startups that are going through the programs you guys administer, is the valuation? Like, I run into companies all the time and they have no idea what to value. Even people who have been in business for 50 years are like, what do you think? I'm like, I don't want to tell you what you think you should. But what's that look like for the companies going through?
So they understand there's a gap in the knowledge on in terms of valuation of their businesses. They try to have the other side price their rounds. That never works the way of the entrepreneur. You always gotta get underserved there that way. Just, you don't go to a barber and ask him for if you need a haircut. They're always gonna say yes, right? It works the same way. You don't go to an investor and ask them, how much am I valued? Yeah. Because they're gonna say, well, we can take your cash flows and discount it back to zero to see exactly how much you're gonna be valued, and you don't want that. So there's still a gap in knowledge, but it's all can be solved with educating people. I try my best to actually speak and promote that you need to understand how companies are valued. It's not difficult. It's actually basic math. You just need to take the time to sit down, read a little. But that way, you may not have a specific valuation or price, but you can get a range to negotiate with. And it gives you some sort of advantage when you go and sit down with an investor, because at least you know where to negotiate at.
Yeah, because you've thought through where they're coming from.
Exactly.
So maybe the next question directing towards investors that would be listening, like from your perspective in the ecosystem in Puerto Rico, what's some misconceptions? Like how should an investor that's like new to this market look into it, and where are the opportunities and misconceptions?
Wonderful. So just like you would in any other ecosystem or any other region, if you like investing in the Boston area, or like in San Francisco Bay Area or New York, the challenge is always the same, right? Exploring deal flow to find the perfect deal. And the perfect deal is not necessarily a super profitable business. It's not necessarily a specific niche. It it's a deal that aligns with you as an investor. And you have to do the same effort here in Puerto Rico like you would do anywhere else. There are many investors that try to see the deal flow in Puerto Rico as in, well, we need to maybe apply some sort of factor discount to it because it's Puerto Rico. That's nonsense.
I'm like the opposite. I'm like, if you understand Puerto Rico, you should actually give a premium
exactly,
to it.
add a premium to it. I mean, there's so many incentives to running a business here in the island that you can actually, use to grow your business that there's actually a premium being added by the same island, by the same ecosystem. Investors that are looking to invest in Puerto Rico, go straight to where the deal flow is. Go to Parallel 18, go to Grupo Guayacán, go to the Bravo Family Foundation, go to Centro para Emprendedores. You have so
Impeller.
many. Of course. That should be your first stop, actually. I mean, if you know about Puerto Rico through Invest Puerto Rico, you probably should. The first thing you do is hop into Impeller. Because
you don't even have to wait for a demo day.
You don't have to
jump
wait for
online
demo.
and
Also, and you can actually check out Panoramica.
Yeah.
Now that we have a full picture of exactly what our deal flow and ecosystem is like, faster than ever. Before that, you will have to go to demo days. Now you can actually go to Panoramica and explore it, and then go to demo day.
Yep.
So it's just the same effort that like you would do anywhere else. You need to see the deal flow. You need to get a taste of it. You need to explore deeper. We have a lot of investors that you wouldn't thought of them as angel investors if you just saw them from afar. They are actually actively investing in our ecosystem.
Yeah. Would you say that what's the most common investors? Are they angels? Are they funds? What have you seen? I'll share what I've seen, but what do you see?
Whew. Tough question. So in Puerto Rico, you'll get either private credit, which tends to participate a lot in particular deals in Puerto Rico. They're more conservative, but they know their business well. So they do a great job at it, and they're highly popular now. In terms of our deal flow per se, we get a handful of angel investors that nobody else knows about, that are local, that are here in Puerto Rico, and they're actually eager to invest. They want to put those checks to work. And we have even mentors of ours that start as a resource to teach these entrepreneurs and end up investing in them because they see so much potential on them. But we also have a few VC funds here locally that invest in local companies, and also VC funds from elsewhere that actually invest in Puerto Rico. We saw their Raincoat deal, their latest deal. We had SoftBank, we had two Sigma Ventures investing, top-notch VCs from mainland US and globally investing and betting in a Puerto Rican company.
Yeah.
So it's not only here. You can actually get a lot of participation from outside. And the same happens, for example, with companies from other parts of the world that go through P18. We actually get a lot of investors from Colombia. We have a lot of investors from Argentina. Investors from Mexico. They're very, very popular with our startups. And the same thing we get from investors from Europe. And like 6 months ago, I was talking to a few investors from Brazil that were investing in a company from Colombia, requesting information from Puerto Rico. And that shows a lot. That shows you that they're actually trusting our processes, not only on the deal side, but also on this institutional side.
Sure.
They trust our investors. They trust our advisors. They trust the people that are behind training and mentoring these startups. They're trusting Puerto Rico.
That's awesome. And that's important for the shift of understanding and mentalities for the island, especially on the investment front. I remember even just a few years ago, I spent a lot of time explaining to stateside investors, yes, we're part of the U.S. Yeah. We raise under the same securities laws as every other state. It's exactly the same. And they're like, oh, okay, because they didn't know that. Yeah. But what about corporate structuring? Are you familiar with Delaware? Yes. It's a carbon copy. Oh, well, that's not scary. I'm like, I know. And then I normally would jump into incentives and why it's premium.
Of course.
And on the incentives front, for those who don't know, Puerto Rico has tons of incentives, 420 pages in the incentives code, and who knows how many in the regulations for those incentives.
Called Act 60.
Act 60. And that spans everything. There's literally animal husbandry to export services to manufacturing, like you name it, energy, hospitality.
Young entrepreneurs.
That's a great incentive, by the way.
It's phenomenal. So for those who don't know, young entrepreneurs 35 and under, I think they should open it to everyone, especially after seeing those, the reports, like the average successful entrepreneur is like, what, 43 or something like that. Anyways, that aside, it's still great for young entrepreneurs because you pay zero taxes on your first $500,000, over the first 3 years. Wow, I wish I was younger. With that, though, are incentives being taken advantage of by the companies that are working with Parallel? Is that something you focus on? Is it something new? Has it always happened?
So there are very different verticals around it. So, for example, local entrepreneurs, 50% of them know about these incentives that they can actually benefit from, but you will be surprised that there's still a lot of people that don't know that Puerto Ricans themselves have some incentives they can use. For example, the Young Entrepreneurs Act under, that's law.
It's under Act 60. It used to be 135.
135. Yeah. Okay. Yeah. So not many people know about that. We try to teach them, and that's among the few things we ask during the first day interview on our KPI meetings. Are you using any type of incentive to, decrease the capital burden of expenses you're going to be taking during the first few weeks or so? And when they say yes, then we try to dig deeper to see what things they haven't taken advantage of. Mm-hmm. But you would be surprised. A lot of local entrepreneurs say, I don't know how to apply for them. And that's why we try to, we bring you to Pearl 18 to give us a mentor session so that they can understand further how they can, leverage Impeller, leverage Panoramica, and leverage all these incentives. We also bring people from Ferraioli, we bring people now from DLA Piper as well, so that they can talk about these incentives and, tell them, hey, there's a lot of resources and tools you can use. They're out there. Yes, there's a little bit of digging around to get there, but we're here for you. So we're going to get you there.
Sure. No, that's great. So as we get ready to wrap up, what are some, just through your experiences in general, and for both entrepreneurs and the investors listening, what are some maybe unique insights that you've come across, whether on the personal side of life or working with all these startups, that you think we just got to know?
Leverage data. You'd be surprised how many of our decisions are biased and not necessarily lead us the right way just because we did not take the time to actually look at the data. One of the first things I tell any entrepreneur that I have a meeting with is, have you performed a customer discovery survey? Have you surveyed around people to see if what you're trying to develop, there's actually a need for it? Have you looked around the statistics? Ask around, gather data. It's a lot easier to take decisions where you're being objective and evidence-based or data-driven than it is to just live out spontaneity. It's a lot easier. And specifically in my life, I've tried to do everything data-driven and objectively as possible. I try to avoid biases, and if I know I'm going to be biased, I ask somebody else to help me on the decision-making. Because I know in the end, it will probably be the output I desire. So if it's for the best, I always seek the data. And that's something that if I could tell each and every entrepreneur in the island and elsewhere, one single thing would be leverage data.
Where would you recommend them going to look for that data?
Surveying. Surveying is a powerful way to gather data, and not many people take the best of it.
How do you recommend them do that?
As simple as prepare a Google form, gather some questions, evaluate and review those questions, send them. Go around, ask random people what they think about X or Y. Most of the time, you're going to be surprised about what they answered. And if it was what you were expecting, then good. It means you were in the right way. It means you were objective. It means you took the best way possible to pursue an idea, and you considered the probabilities. And most of the times, it will work your way if you do so objectively and based on data. Everything these days is driven by data. And if you're not doing things the objective and data-driven way, you'll get lost.
And that can be hard for a founder, and why in some cases a founder is not a good CEO beyond a certain point, and you get too caught up or emotionally in it. Oh, I invented this, and it's how it is the best way. I mean, I actually had to fire one of our co-founder CTOs at one of our companies because they were so stuck on their initial way of thinking, which was years old and not relevant in the same ways anymore, even with data going against it. And it was like the hardest thing I ever had to do. But like, if you're not going to follow the data of what customers actually want, then why are we even in business?
Literally.
Like why?
And I'm happy you mentioned that, because one of the things that I took personally in life in the past like 4 to 5 years was I saw how many of the big CEOs, they actually have board of advisors of around 10, 15 people, right? Overseeing the CEO. And the CEO themselves ask for that. And I thought of my life and I'd say, I remember this day, it was a Sunday. I was in my home, my wife was taking the dog for a walk, and I started just having my cup of joe, which is very important in the morning. And I said, I've been making decisions my whole life, trying to base on data and try to make the best out of it, thinking on myself, trying to make decisions and perform critical thinking alone on how I want to lead my life. What if I had my own personal board of advisors, which we of course call mentors?
Yes.
And I started to gather some mentors in life. I already had my first mentor, which was Dr. Jose Rodriguez Orengo. Of course, then I onboarded some other mentors. I have one of my another mentors that I'm grateful for, Ms. Mirna Rivera, great investor, by the way. Having them have given me different perspectives on life, different perspectives on decision making. And whenever I find myself in this corner where I'm not completely sure how to interpret data or which decision should I take, I grab the phone and I ask them, what do you think about this? Should I be doing this? Why not? And if yes, why should I? And it has potentially levered all the output that I managed to put out there during the last few days. And actually, that's one of the things we're trying to incorporate into our programs as well. We try to protect our startups, of course, from everybody that wants suddenly to become an advisor of them because they know marketing or they know very well how to sell. But we try to push that they consider that as a CEO, you never know everything. And you will never know everything.
Yeah.
You should seek counsel from people that have been there. Not to take it at cost, but to consider those experiences. And now that we're launching our new generation of pre-18, which, by the way, applications are open. So we close on October 14. Equity free funding and all the resources and mentorship. One of the things that we are integrating is getting the right mentor. Because there's so much value added, both for the company and, like I told you, in my personal life, I have my own mentors. I have my own board of advisors that whenever I need an answer for something, consult and take the average of all the output, make the decision. Maybe I fail, who knows? But if I do, I did it objectively.
Sure.
It's an objective failure, I guess.
Yeah, there's a lot of wisdom in that because it takes humility to obviously for somebody to lean into that. Well, we're grateful for you coming on. Definitely check the show notes for Parallel 18 and the other links that we discussed in the show notes. Subscribe, we're going to come out with a lot more interesting interviews. Thank you for your time and excited for all that's to come.
I always like collaborating with you both, so may this be just another step.
Yes.
Yep. Just one of many.
That's all it is.
Awesome. So
wonderful.
Remember, data. That's one of the things we'll take away today.
Wonderful.
And mentorship.
Yeah.
There we go. Data mentorship.
Thank you so much, guys.
Appreciate it.
Appreciate it.
Yeah.
Thanks, everyone. We'll see you next time.
That's a wrap.